I enlisted the help of the #1 finance guru in real estate investing to help me understand why my wholesaling business went broke. His name is David Richter, and he literally wrote the book on finance for real estate investors. He gave me a brutal lesson that taught me 3 financial mistakes that I made that left me completely broke. Number 1, my finance stocks were a mess.
So let's do this, Tim. Let's see what you actually made. Let's see what you spent. Let's see what you kept. Like, see if we can pull out some of these numbers together and then go from there. So are you ready? Ready to dive in?
I hope everyone can appreciate the vulnerability here. I don't know if I'm ready, man, but let's do it.
It's like walking naked into school or something. You know, it's like those types of nightmares.
So this is my profit and loss statement. All my revenue, expenses, and income from my wholesaling business. This year was the best P&L that I had, where I was just strictly wholesaling, and I thought it would be the most relatable to all the full-time investors out there watching this video. David's analysis of my business still blew my mind and will help my wholesaling strategy moving forward today.
So this is the P&L. This is broken down by month. I love monthly P&Ls because we could see month to month, how is it doing? Now, one thing I did not get from Tim, if you do this one thing, it'll help immensely. Do year by year, side by side. This is the totals for the same time period. So the one I showed you first was monthly. This one's for the same time period, but it's the totals of the whole year. I'd love to have 2019 or 2020, and then we could compare them to see how did January do 2018 versus 2019, and like, can we see any trends? So we want to know, what trends do we have in our business? Are there certain months that are worse than others? Are there certain quarters that are worse than others? Because that will help you cash-wise to know, shoot, I need to prepare. It's winter time in our business. And we need to know that we don't bring as much in. For the last 2 years, we haven't done as much in the last quarter. So that's number 1. Like, try and compare. Here we go. These 2 line items, the 183, total income, and the gross profit here, the 178. This is the beat your chest numbers. This is where a lot of people say, look at how much I did. And they're talking about that. Like, look how much profit I did. And it's like the 178. Well, that's like before you paid everything else out. Do you see this? He's got, for up here for his income, 2 lines. For his cost of goods, 2 lines. For expenses, look at all this. A lot of people beat their chest on this number and say, look at how much I'm doing, but then no one talks about this number, the actual net income. One of the first things I see on here, it's pretty good. He has his income broken down by 2 different types, PPC and assignment income. Did you have any other types of income coming in?
Yes, so assignment income is all wholesaling. The PPC income, so I had an inkling. I run a PPC agency. It was my first little baby inkling of that. I think I got one client who paid me $5,000 probably in the last quarter of it. Yeah.
Did you have any other real estate type of income that year?
Nope, no flips, no nothing like that.
If you had flips and stuff, then I'd want to see a line item for like flip income. Or if you were doing different types of wholesale, maybe double close and assignment. He was starting a new business, but he's got it on the same P&L as his wholesale company. So,
yep. And I will say that the reason why I didn't send like a last year's P&L is because I still do that. And I talked to my accountant and he said, look, it's not like a huge deal unless I'm doing like $1 million, which I'm not.
Right. So Tim's trying to justify his P&L, but I would think I would want 2 separate companies. I want a PPC company and a wholesale, but that's just me. If you are thinking of scaling it, if you get sued in one because your PPC sucks and you get sued over there, guess what's liable? Your real estate too. So that would really suck. Cost of goods sold. So deposit loss and title search fees. If he was flipping, this cost of goods sold here would be way deeper. And before it hits that line item here of gross profit, if you're doing a fix and flip, you would have what all repairs, what all utilities went into it, what all the holding costs, like all of that would be in the cost of goods sold.
2018 was the last year I was a full-time wholesaler. That's because I had to get a full-time job because wholesaling was so stressful and just not worth the money I was making. If I had the information that David was about to give me years ago, me and my wholesaling business wouldn't have burnt out. Number 2, not knowing what I needed to survive. I gross, let's say 180,000.
Yeah.
But my net, if we go down to my net income, 30 grand, and I did pay myself, there's a salary in there of 24 grand. So I net like 50. I could get a cubicle job and make more than 50 grand.
So let me ask this, Tim. Was this enough to pay your bills in 2018?
No, not really. It was a stressful year. It was 2 things, right? Like the monthly P&L, my cash flow is so inconsistent. I made 60 grand one month. I made $0 another month. So at the end of the year, it's easy to look back and say, was this enough or not? But on a month-to-month basis throughout the year, man, it's super stressful. You don't really know how it's going to end up. And I will say no, 27 grand is not enough, but with my salary, 27 grand plus the net
Yeah.
income, 50 grand, yeah, it was enough to live off of. I'm not balling. And to me, I'm like, I'm dealing with so much financial uncertainty and stress in the business. I'm like, man, I could get a cubicle job, make the same amount, and don't have any of that stress.
What would you have said? Like, this would have been a successful year in 2018.
I don't know how to answer that question, David, because it's like I would have loved to made 180K and kept 180K. So to me, I'm going off of the assumption that there's a right answer. Profit margin means your net income divided by your gross revenue. It's what percent of every dollar that you bring in that you take home for profit. And I thought profit margin was the key to me having a successful and happy business. So David and I go back and forth discussing how much I paid myself versus how much I should have actually paid myself to have a healthy, sustainable business. Like if you're at Amazon, you're making 5% profit margins or whatever, and that's great. But if you're, a marketing agency or whatever, you should be doing 30%. And like different industries have different what we should be doing.
I'm going to push back on you now, just seeing this over and over again. I like the business owner mindset of like, we should be this profitable in the business. At this stage though, if you're hurting and feeling drained every single month, like, oh my gosh, where is this coming from? It's like, we got to establish that you need to be taken care of, and you need to give yourself a number where if I bring this in, I don't have to worry, even if it's not where I want to be. So that's probably a question I would have asked at the end of 2017. What would make you feel successful in 2018? I was just talking to a guy last week, brought in like 500K gross profit and like had 300 net, but still felt like a failure. I know I said I have like 300 in net, but I don't know where a lot of that is.
After some deliberation, I decided I wanted to make $70,000.
I needed at least 70,000, to be able to do this, to feel successful, to feel like it was worth it, to feel not stressed. 28,779.07 divided by 178, 16% net profit from your gross, which actually isn't terrible. A lot of people would be very happy with that. So it's like, here you have a healthy profit margin, but you can't live off of 28. So it's like, I could tell you healthy margins of where you're supposed to be, and it's like, it would still make your life miserable because you're not bringing in enough. For you, Tim, the number we should focus on is, was this enough? If we were to look at your P&L on a monthly basis, you had some 67 grand months, you had some 5 grand months. So in there, you had some $0 months. So it's like on the 67 grand months, you pay yourself still the 5,800, but then on the 0 grand months, you still have the months that you did super well on, but you're still paying yourself the 5,800. That's what a consistent business does.
So where does David come up with $5,800 a month? He takes my goal of $70,000 income and divides it by 12. So then I would pay myself $5,800 a month, of which if I paid myself that, I would have reached my income goals for the year. But I also would have removed all of the stress from having such inconsistent cash flow. No matter whether I made $60,000 or $0 in a given month, I would still pay myself the $5,800. But I still wasn't grossing enough to even net $70,000.
So if you say, I want to at least put $70,000 in my pocket, divided by 15%.
So here, David is calculating the amount of gross revenue I would need to bring in at my current profit margin of 15% to net $70,000.
I need to make at least $466,000 in gross profit. It's like, if I need to make $70,000 in order to get there, can I realistically do it with the business that I've built? Could you go from 2018 doing $178,000 to $466,000? The next year, more than doubling.
That'd be hard. That'd be hard to do.
So we got to do two things then. If we're not going to increase the revenue that much, then we have to increase the profit margin. So it's like, out of those expenses, like, we'd have to go line by line.
I can't triple my revenue in a year.
Yeah.
So let's focus on the profit margin. Can we just go through maybe some of the line items and see if was this a bad decision or not? Number 3, spending way too much money. So now David is going through my expenses to figure out what we could cut to save me some money.
All these different line items, are there any that are unnecessary? Profitable, replaceable, or unnecessary? Expenses, I do like how he splits out the advertising and promotions, direct mail, internet marketing, website expense, advertising and promotions, other, which was really small. So it's probably insignificant to even run, an analysis on this. But do you know why this is so good? If you're watching this video, is if I have it split out by every source, I can literally take that source and work it backwards to say, how many deals did that cover then? If I spent $42,000 or 43,000 almost in internet marketing. How many deals came from internet marketing?
So my bookkeeper uses QuickBooks for sure,
Wow.
obviously. And I can share, like I can pull up my marketing
So-
and break down that 42 grand. My main marketing channels, or all my marketing channels, were all basically online. I did PPC, which is what my bread and butter is. I spent 35 grand. I did a little bit of Facebook and a little bit of SEO agency spend, and then like a very tad direct mail.
How much came from those different?
Yes, roughly I do. The tracking with my website wasn't perfect, but you basically, the majority of the revenue did come from my Google ads. I remember that. And Facebook was I got one deal from it, but it wasn't great. It was basically a split between my AdWords and my SEO spend. I don't think I could cut either of those, to be honest.
Simply cut Facebook, which was 4,500.
And I did cut that. Afterwards. Yeah, so I can cut the Facebook out, yes. But the other ones, I cannot.
You're pretty much just going to have to keep it there. So then you'd have to go back to your P&L and see what the other expenses are. And is this profitable, replaceable, or unnecessary?
My automobile expenses were almost 4 grand, and that's mainly gas and my car payment, I think, of what it was. Yeah. So I don't think I can cut that out too much.
Right.
Yeah, bank service charges was like a refund. Business licenses, no, I think that's like a Delaware fee. Computer and internet expenses, I don't think I can cut much of that. So we went through every line item of my business to see what could be reduced or cut. I could trim a few meals or software subscriptions here and there, but there's one glaring expense that stood out. I think for me, looking back, what I could have cut, looking at my subcontractors, I spent 42 grand between 3 subcontractors. So why did I have 3 contractors? I had one part-time admin handling all of my databases, my emails, marketing campaigns, and the general organization of my business and paperwork. I went through 2 other contractors who were my salespeople. They handled all of my phone calls, analyzed my deals, and scheduled all of the seller appointments for me. Being a small business, I probably didn't need to have 2 people. I probably could have had one person do both jobs, or me just get better with my system. So I probably could have saved myself $20,000 this year, which would have hit me to from 50 to 70. I think looking back, that's what I should have done better. And then I would have hit the 70 and got my profit margin up a lot higher.
Make sure that you get what you need from your business, especially where you are now. That's what the most important thing is, to make sure that you're still in business years from now. Because if you're feeling burnt out, the whole business goes down.
And that's exactly what happened to me. In a future video, I'll go over just how much I net this past year in my wholesaling business.